Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here with the one and only Peter Schiff. Peter, thank you for coming on the show.
Oh, thanks for bringing me by.
Yes. Pleasure's all on this side of the table, sir. Let's start out like we always do. And what is your macro view of the world economy and financial markets today?
Well, my macro view really hasn't changed much over the years. In fact, the problems that I've identified in the macro economy continue to worsen, particularly the role of the United States. The United States being the issuer of the world's reserve currency, that has been the epicenter of rather substantial global economic imbalances, where the United States lives well beyond its means, and that's made possible by the rest of the world financing that and living beneath its means. The U.S. trade deficits continue to rise to record levels. U.S. budget deficits are sustained at record levels and rising, and I think that is really the source of a lot of these imbalances. And I think ultimately there's going to be a resolution there with a significant collapse of the value of the dollar. That hasn't happened yet, but I think that's going to rein in all the excess borrowing spending here in the United States. It's going to precipitate a collapse of really what amounts to a bubble economy here in the United States. And I think that that development is going to be a major positive for the rest of the world, because I think it will relieve the world of the burden of propping up the U.S. economy, subsidizing the U.S. consumer. And I think that will unleash a boom of prosperity, particularly in the emerging markets where that burden has been the heaviest.
Okay. Which emerging markets or which countries do you think have the biggest potential?
Well, mostly probably in Southeast Asia. I mean,
Okay.
it's China, but a lot of the other Asian economies that do a lot of the production.
Yeah.
Look at where America has its largest trade deficits. I think these are the economies that have the most to gain from no longer subsidizing the U.S. A lot of people will think, oh, well, they have the most to lose because they're our biggest suppliers.
Yeah.
But in actuality, they're not gaining, because all they're doing is exchanging their goods for the money that we print. So it's not a good deal for them, because that money really doesn't have value.
Yeah.
They're warehousing it in our treasuries, but inflation is going to erode away the value. So they're never really going to get paid for their exports. So they'd be better off not exporting.
Yeah.
Consuming the goods themselves.
Yeah.
Or trading with other countries that actually have something they need to pay.
Yeah.
And so I think they would benefit from having a different trading partner, or just, producing more to satisfy the needs of their own people rather than the needs of Americans.
This reminds me of a story. I got to do a tour of one of the cargo ships that came up from Guatemala. It was full of bananas. And I asked the guy as he was giving us a tour, I said, what do we ship back to them? And he told me air. And I said, air? And he's like, yeah, air. And I'm like, so you mean nothing? And he said, yeah. And that's when I turned to the crowd and I said, have you guys ever heard of the trade deficit?
Yeah.
Because this is it.
Yeah. I mean, the ships arrive full and they leave empty. And the problem there, though, is that means that the shipping costs are actually much higher, because the Asian economies have to pay for the round trip.
Yeah.
Right. Because there's nothing coming back yet. Way to offset it. But, I just read and I learned about a major deep water port facility that the Chinese are building in Peru. It's going to be the first of its kind, the biggest in South America. And it's going to allow for direct shipping trade between South America and China. Because right now, stuff has to go through, let's say, Long Beach, because there's no port deep enough for a boat that's big enough to unload and load merchandise in, let's say, Peru, and then make the trip all the way to China. The boats aren't big enough. So they have to use smaller boats, and then they have to ship to Long Beach where they can, unload and then reload it on bigger boats. But this is going to take about 20% of the cost out of the trip, because they can go direct.
Yeah.
But I think more significant for America is they cut out Long Beach.
Yeah.
And so that takes away that port business. But it also means that China is more interested in trading with South America than it is with the United States. And it has a more efficient way to deliver goods. And there's a lot of resources that are produced in Brazil in particular. They're working on a rail transportation from Brazil directly to this port in Peru. And so, this is what the Chinese are working on when we're busy, with Bitcoin.
Yeah, that goes into one of our listener questions. He says, if you had to make one investment, if you had to trade all your gold for one other investment, what would it be? And he's assuming it's not going to be Bitcoin.
Well, no, I mean, I'm not going to trade anything for Bitcoin. Well, gold, although as we're speaking, Bitcoin is knocking on the 100,000 door.
Yeah.
Maybe by the time anybody sees this, it would have gone through that door. I mean, it's got a lot of momentum now. But, it's ironic, too, because, Bitcoin was supposed to be, this is anti-government, free market, an alternative. But now the only reason Bitcoin is really rising is because it's been embraced by the U.S. government.
Yeah.
People hope that the U.S. government is going to become the world's biggest buyer of Bitcoin.
Yeah.
And so I think, but for government intervention, Bitcoin would be collapsing.
Yeah.
And so it's now completely dependent on the U.S. government.
Yeah.
And the force of government. It's the opposite of libertarian, because I think Bitcoin would have failed in the free market.
Yeah.
But now that they've been able to corrupt government officials into promoting and adopting Bitcoin, using force, coercion.
Yeah.
Because, they're taking taxpayer money. I have no say over this.
Yeah.
Right. And they're using taxpayer money to buy Bitcoin, propping up the market. It's ironic that that's now what it's come down to, is Bitcoin is succeeding because of government interference, not because of, it's winning in the free market.
Yeah.
It's just corrupted the government
into
intervening to save it and to prop it up. But all that actually undermines the U.S. dollar. It sends a message. The U.S. government is telling the world, we have no confidence in our own currency. That's why we're printing it to buy Bitcoin.
Yeah.
And if the U.S. government doesn't believe in the dollar, why should anybody else? Why should our trading partners buy our treasuries? Just go buy Bitcoin.
Yeah.
Right? So I think all this undermines the demand for treasuries, demand for the dollar, which is a big, negative, for the U.S.
What are your thoughts on the new, ironically named Doge? What's your take on that?
Well, I think Elon Musk gets a good laugh out of it, popping up, because, he
in marketing, right?
where he got into Doge because, he probably understood that Bitcoin was a joke. And so he made fun of it by saying, well, look, I like Doge. Because Doge, the Dogecoin was created basically to make fun of Bitcoin.
Yeah. Yeah.
And so he made fun of Bitcoin by embracing it. And now they've named their fake department, the Department of Government Efficiency, which of course is an oxymoron. There is no efficiency in government, right? But the Department of Government Efficiency is not a department.
Yeah.
It is at most a think tank.
Yeah.
It's completely independent of the U.S. government. It has absolutely no authority to do anything.
Yeah.
But it can make recommendations, which there are plenty of think tanks out there that have made recommendations as to how you can shrink government. One of the Heritage Foundation came out with their 2025 plan with all sorts of recommendations of ways to shrink government. And during the campaign, Donald Trump completely ran away from that plan. He didn't want anything to do with it because he didn't want any of those cuts associated with him, because he didn't want to lose votes.
Yeah.
So when you talk about, I want to get rid of waste, fraud, and abuse, nobody is against that. I mean, no one can say, no, I want to keep waste, fraud, and I'm in favor of waste, fraud, and abuse. So it's very easy to be against waste, fraud, and abuse because you haven't actually identified something that you want to get rid of.
Yeah.
The problem is the minute you identify that something, people don't want to get rid of it because the constituency that benefits from it, makes a big stink about it. And so that's why nothing is going to happen.
Yeah.
Meanwhile, where we really need cuts is not to the discretionary part of the budget. We need cuts there too, but where they're going to be most helpful is in entitlements and defense.
Yeah.
And that's already off the table.
Yeah.
Donald Trump campaigned to protect Social Security. In fact, he campaigned to increase Social Security by exempting the benefits from taxation. So Trump is against any meaningful cuts in government spending. He's willing to talk about cutting waste, fraud, and abuse, but Ronald Reagan tried to do that.
Yeah.
And had no success.
Yeah.
Ronald Reagan campaigned to eliminate the Department of Education and the Department of Energy. They're still here.
Yeah.
And in fact, the Department of Energy wasn't even created until Jimmy Carter, which was his immediate predecessor. He couldn't even get rid of it. It had already become that entrenched.
Yeah.
And so they're not going to be able to get rid of it this time either, right? I mean, these departments are there. I mean, if Donald Trump wanted to get rid of departments, why did he establish the Space Force?
Yeah.
I mean, did we really need a Space Force? Couldn't the Air Force cover it, right? You know? So, you know, he didn't shrink government when he had a chance. He grew government. And it's not going to happen. There's a lot of enthusiasm about it. But at the end of the day, government's going to get bigger under Trump during his second term, just the way it did under his first term.
Yeah. Yeah. I'm afraid of the same thing. What is your highest conviction bet commodity for 2025?
Well, I still think gold's going to continue its record run in 2025, but I think the entire commodity complex should follow. I mean, I think particularly oil, which I think is really cheap. And, you know, it's Trump's plan to get rid of inflation is drill, baby, drill.
Yeah.
It's not only is that not going to work, but I think oil has been very cheap, and it's been one of the silver linings of the inflation cloud. One of the reasons that inflation hasn't been much worse is because we've gotten a break on oil.
I think
oil's been so cheap for the past couple of years.
Yeah.
Especially in terms of gold. Like it's, you know, we've never seen it this cheap.
Yeah, like 38 to 1 or something.
I mean, it's historically cheap. And so that's not going to last. And it's really going to be when the dollar turns, which it hasn't happened yet. But I think what's going to happen is that the recession that's kind of been, you know, beneath the surface over the last couple of years is going to rise above the surface. We're going to officially acknowledge the recession in the first year of Trump's term. And what is that going to do? That's going to mean the Fed's going to have to be more aggressive with its rate cuts. It means that quantitative easing is going to return.
Yeah.
And all of that is highly inflationary, bad for the dollar, and that should push up commodity prices, especially oil prices.
Okay. So it sounds like you're split between oil and gold.
Well, I mean, I think everything's going to go up. Yeah, but I think more people are going to run into gold as a hedge against the dollar, hedge against inflation. And I think, again, you know, right now, Bitcoin is kind of a distraction from gold. But the smart money is going to keep buying gold. And in fact, again, if the U.S. is dumb enough to buy Bitcoin, the U.S. government, then foreign governments are going to be even more motivated to buy gold, especially if the U.S. pays for its Bitcoin with its gold. That's what the Loomis bill in the Senate basically says, that we should sell our gold to buy Bitcoin.
Oh, I didn't know about this.
Yeah. So, you know, that would be the dumbest thing we could do.
Yeah.
Because then the Chinese would be buying all that gold from us and everybody else, and we would just be stuck with a pile of nothing.
Digital something on a ledger.
We'd be the laughing stock of the world.
Wow. Okay. All right. You know, something you mentioned there that I kind of want to riff on is that I kind of feel the same. Like maybe we've been postponing this recession because energy prices are so cheap. Because, you know, when you have Henry Hub it got down to $1.50 a million BTUs. Maybe it's because it's so cheap.
It's been cheap. You know, pump prices have it because of other costs.
Yeah.
That, you know, are on top of the actual crude oil.
Yeah.
But I think the other thing is the media has, you know, put a positive spin on everything because they wanted to help Biden. They wanted to help reelect Biden initially, then elect Kamala Harris.
Yeah.
But once Trump fully takes over, the media now has an incentive to talk about how bad the economy is.
Yeah.
Because they don't have, you know, they don't need to prop up Trump. In fact, they want to blame him for stuff. So what the narrative is going to be by the media is that Trump got a great economy from Biden and destroyed it. And now we have this massive recession. Look how bad the economy is. In just a few months of Donald Trump, that's how long it took him to wreck this great economy that was built by Bidenomics, right? Trumponomics has destroyed it, and now we're in a recession. Right? So that's going to be the story of 2025 is how Trump destroyed the great economy he inherited.
Maybe they'll actually start giving us the real jobs numbers. Just start them. Okay, a question from Jonathan. He says, how exactly does the Fed debt crisis unfold step by step to impact markets?
Well, I don't know exactly how it's going to unfold step by step. I know that it's going to eventually unfold. But it gets to the point where the U.S. government can't sell its debt anymore.
Yeah.
Because there aren't enough, legitimate buyers
Yeah.
that have confidence to buy it.
Yeah.
And so when that happens, then the Fed is going to step up and supply the buying that the market.
They're going to have to buy it themselves.
Right. So they're going to print more money. But then, when people recognize that, oh my God, we this moment is here, then you could have a run on the dollar, a run on the treasury market, because nobody wants to be left holding the bag.
Yeah.
It's like, I got to get out.
Yeah.
Because the reason this comes about is because interest rates need to go up to reflect the risk of holding treasuries long term.
Yeah.
With accelerating inflation. But we have so much debt we can't afford to pay. So the Fed is going to try to keep interest rates artificially low through quantitative easing so that rates are at a level that the government can, afford, or at least, appear to afford.
Yeah.
But if the world decides that inflation over the next 30 years in the U.S. is going to average 5%, but the Fed is capping the yield of treasuries at, 4%, why would anybody own them? You're guaranteed to lose money.
Yeah.
But it's more likely, I think, that people will recognize that the inflation rate could be 8 or 10%. And they want to get the hell out as quickly as they can.
Yeah.
Because the Fed won't let interest rates get anywhere near an amount high enough to compensate for that loss, because we can't afford to pay. I mean, the national debt is over 36 trillion now. It could be 37 trillion when Trump takes over in late January.
Yeah.
I think by the time his term ends, if we haven't had a crisis by then, we'll have 50 trillion of debt.
Wow. Okay.
So, even at 5% interest rates, it costs $2.5 trillion a year in interest.
Yeah.
$2.5 trillion. That's half of what the U.S. government currently collects in taxes.
Yeah. Yeah.
I mean, so assuming tax revenues, they could go up, but they may even go down, right? We get tax cuts. But how can the government spend half its income on interest? Not even not even repaying the principal. Just the interest.
Yeah.
Right. But it's going to get worse, because if we just pay the interest on the debt itself keeps getting bigger and bigger and bigger.
Yeah.
And so that interest payment gets higher and higher and higher. So this is a massive fiscal crisis, time bomb that's going to explode.
Yeah.
But exactly how it plays out, I don't know.
Yeah.
We'll have to find that out, when we experience it.
I'm wondering if we're already seeing a hint of that, because I've been watching the bond markets, thinking that maybe we can catch a little arbitrage here as they start cutting rates, then the cost of the value of those bonds go up, and kind of the opposite is happening.
Well, that's what I predicted was going to happen. I thought that when the Fed started to cut rates, that's when long-term rates would really start to rise. And that's about what's happened. We had a 75 basis point reduction in short rates, 75 basis points increase in long rates, yield curve steepened.
Yeah.
I think that's going to continue. I think we have a long way to go on the upside of the bond yields.
Yeah.
And I think that's what's going to prompt the Fed to go back to QE to try to stop the rates from rising.
Yeah.
Because that means mortgage rates are going to be going up.
Yeah.
And the purpose of the rate cuts, the Fed wanted to bring mortgage rates down. Instead, they're going
up. I just saw today, 10 minutes ago, they're at 7%. It's not working.
No, and they're going to go higher.
Yeah.
Until the Fed goes back to QE, mortgage rates are going to go up, and rate cuts will just accelerate the rise.
Yeah. Yeah.
But if they stop cutting, well, they'll keep rising. So it doesn't matter what the Fed does at this point.
Yeah.
As long as it's not doing QE, rates are going up.
Yeah.
Yeah.
Yeah. Awesome. Well, thank you, Peter. Do you have any final thoughts? Any parting words?
Well, it's nice to be here in New Orleans. We have a 50th year anniversary. Unlike the Bitcoin conference in New Orleans, I mean in Nashville, you only got about what 500-600 people here. They had 20,000 people. See, it's a bubble. You really had right. Everybody's, So this is a much more subdued environment. Even though we are at record highs this year, gold soaring to all-time highs, although it has pulled back somewhat since Trump was elected, and now Bitcoin is, nearing 100,000. But I would encourage people to continue to buy gold and silver. That you can contact, Schiff Gold to buy physical gold and silver. I'm going to be here. I got a presentation tomorrow, my workshop, my keynote. I would encourage people to take advantage of the strength of the dollar to invest overseas, particularly in emerging markets. I think that's going to be the major beneficiary of these macro trends that are going to be playing out over the next several years as everybody is, hitting all this false optimism on, big cuts to government spending by the Trump administration. That's not going to happen. What we are going to have is big increases in debt, big increases in inflation. It's going to further undermine the economy. So you want to invest internationally. So people should visit my website at europac.com, EUROPAC.com. Contact my advisors, talk to us about how we can help you, reposition your portfolio to get in front of these trends, to profit from what I believe is going to be playing out over time. And also don't forget, follow me on social media. I got my podcast, The Peter Schiff Show. I do, one or two of those every week. You can listen to schiffradio.com or anywhere that they have podcasts. Follow me social media on X. That's my biggest platform now. I have over 1 million followers, so I'm constantly posting stuff up there. So make sure and follow me so you know what's on.
Awesome. So we will put links down in the show notes below. Thank you, Peter. And thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy. They can't stop talking about Bitcoin. You have yourself a great rest of the day, and we will talk to you next time.